Hi, this is Dave with Market Trading Concepts. It is Saturday, June the 2nd, 2012, closing out the week for Friday, June the 1st. This video is going to focus strictly on the stock index futures, and we're going to start out with the Dow Futures. Now, as we can see from the intraday charts, looking at the 5-minute, the 15-minute, and the 60-minute chart of the Dow Futures from Friday, you can see that we were in pretty obvious downtrends, and our trends were all very negative on the day. So we had somewhat of a strongly trending day based on the intraday charts, and we ended the day down close to the lows of the day. That in itself is a pretty negative, has a very negative connotation, especially at the end of the month, closing out the month. The cautionary tale heading into the beginning of the month, starting with Monday, is that closing out a month and going into the beginning of a new month, the question is whether funds are going to need to do some window dressing, or are they going to need to shore up their positions, and are they going to be net buyers of stocks? So that is a question we don't know at this point in time. The price action from this week has been very negative, and let's expand out clear the screen off, expand out the daily chart, and let's take a look at what the price action itself has been telling us. So we've been talking about a break of these levels for some time. We've had somewhat of a negative bias on the market. We talked about potentially this 8 and 21 8-period moving average denoted by the yellow line, the 8 exponential moving average crossing over the 21-period exponential moving average, being a negative bias. And we were looking at these moving averages rolling over, and we've been talking about lower prices if we break this key support level at 12,652. So we had that situation take place. We've been talking about it. We had some support here at 12,300, and the question was, we felt that we would probably get a bounce from the 12,300 level, which we did here. You can see it didn't go any lower, and you can see this sign of accumulation in here, and it got accumulated all the way up to the highs of that move. Now, in this situation, what you're looking at is, if it's not going to push lower, it's probably going to push higher. We had that situation take place, and this was the potential selling opportunity here on this day, where you pushed into the 21-period moving average. Now, this is something that we had talked about in last week's video, if memory serves me correct, and this was the selling opportunity. And now from there, we came all the way back down, and we broke this 12,300 level, and now we're coming back down to another fairly key support level at 12,062. So the question in my mind is whether or not this 12,062 level is going to hold. I would expect probably an initial bounce off of this level. So in terms of fresh shorts, I'm not really that interested in initiating fresh shorts into the support level, because the expectation is basically that this level here may hold and bounce, and that we, if entering into fresh shorts down here, we could experience some heat if we get a retracement back up. So what I would be expecting to have happen at this point in time is I would be looking at potential support at this level, 12,062, a bounce back up, and maybe looking to reinitiate a short position or enter a new short position around this 12,300 level, or wherever the moving averages come down. So, for example, it would make sense here that these moving averages will be moving down. We have this trend line in play now at these two key points, drawn from these two key points, starting from the highs, and a potential support here could cause price action to either come up and test the trend line here, or potentially if the moving averages roll down, that these three levels converge here, and then you have a confluence of levels. So you'd be looking at moving average resistance of the 21 period exponential moving average. Potentially you'd be looking at trend line resistance, and then you'd be looking at specific price resistance around the 12,300 level. So this level here, support, once broken, now becomes resistance. And what I'd be looking at then is for a retracement back into that level. So that is one of the approaches that I would look at taking. The other approach that I would look at taking would be that if we just crash through this level here and we enter into a momentum type of situation where this level here doesn't hold at all and we just break through it and we have enough activity take place below this 12,062 level, well then I'd be looking for potentially a retracement back into this level using the same logic as we just discussed at around this level, and looking at initiating a short position potentially there. In order for that to take place, though, I would need to see the price action break that level cleanly, come back and retest this level or this level here. So it's kind of an if this, then that situation. If this, then, you know, do that kind of a situation. So I hope that that makes sense. Now, let's just go back in time a little bit and have a look at this support level. And you can see here that this support level here, 12,062, coincides with a lot of price congestion in and around these levels, and you can see it coincides with this prior resistance, which was obviously a major level. It tested it here once, twice, three times. The fourth time it broke through, so it broke out through this level on the fourth try. So this, I think, is a pretty key support level in terms of the overall trend. So the question is whether will this level hold and we get a bounce off of that level, and will it make sense to reinitiate a short, or will we break this level? If we break this level here, we will probably look for potential support somewhere down in this level here around the 11,583 level initially. Now, you can see here the trend is still intact, but at some point here it should be rolling over. I'm actually surprised that it hasn't rolled over already. And the other thing that I wanted to quickly point out is that you have what I think is a pretty bearish situation here, where you had from this low to these highs in and around here, you had this retracement take place where you initially held the 50% retracement from this low to this high, and then you came back down and you actually broke through here the 61.8% retracement. So when I look at the market from that perspective, if we stay below this 12,229 level, we are basically in a very kind of negative situation where it looks like we're going to get more downside. If we retrace back up, but we don't close above this 428 level, well, then I'm still looking at this being a bearish situation. Ideally, in order to stay on the short side, I'd want to stay below this 12,229 level. If we closed above 12,428 decisively, then all bets on the short side are off, and I'd be looking at potential upward movement again. So this is kind of the line in the sand where if I'm short and we close above this level, I wouldn't really want to be long anymore. So either, a decisive close above the 21 EMA, or decisive closes above this 12,428 level where it looks like we're going to hold that level. At that point, all bets would be off on the short side, and you would have to kind of reevaluate and determine if it makes sense to be short the market any longer. That said, we've established the levels to potentially get short and some potential targets. Initially, if we break this support level, I think that we would have to be looking at a retest of this level down here around 11,583-ish. So that's really, this is the air that you have to the downside in terms of potential movement, and getting short with a retracement somewhere around here, I think makes sense on a decent retracement. I wouldn't want to buy short the low, hoping that it's going to go lower into what seems to be this level here, which seems to be a very significant support level unless it breaks that level decisively. I hope that makes sense. Let's continue on then, looking at the Dow Futures from the Darvis Squeeze perspective. Let's start out with the weekly chart. The weekly chart looks net negative. We have a situation here where, although the trend is still intact here, we're losing momentum. The MACD is rolled over, but it's still above the zero line. The Hakinashis are red, but you can see here the situation where we closed below the 21 period moving average a couple weeks ago. We stayed below it, and you can see the 21 period moving average is now providing resistance to the potential upward movement. I don't believe we yet have a crossover of the 8 and 21 EMA on the weekly chart. Just going to try and zoom in here to see if we can get a better indication of that. But it looks like it's trying to cross over here, and it hasn't yet. So the yellow line hasn't crossed below the white line, but it is still looking fairly negative, and it looks like we may get some more potential for downside. We do have some support coming in here, so that is a cautionary or red flag for further downside. So I think I'd be expecting a bit of a bounce at this level unless we don't get it. So that's kind of like a decision point there around the 12,062 level, where we need to see if we're going to get support or not get support, and probably be flat into that level and decide what to do based on what the price action tells us around that level. So that's more of a decision point. So now let's take a look at the daily chart of the Dow, and we can see that it's looking fairly negative, and we have a Darvis box break here, although we don't have a fresh Darvis squeeze break, where the squeeze is in play as well. But we do have a Darvis box, a break of this Darvis box, red Hakinashis. You can see volume here starting to pick up. And you're below your zero line here, and your trend is in alignment with what the price action is telling you. Let's take a look at the sister indexes. The S&P futures on the weekly chart, the ES contract, looks much the same as the Dow futures on both the daily chart here and the weekly chart. So there's no real new revelations there in terms of the S&P futures. Now let's take a look at the Nasdaq and see if that's giving us any other indications here. And just take a second to pull it up. We can see from the Nasdaq chart that it looks fairly similar to the Dow and the S&P. In fact, the weekly chart looks almost identical, and the daily chart looks fairly close as well. The only concern I have here is that we have a price low here in the trending indicator, and you can see the price is breaking that low, and yet it's making a higher low. So that minor divergence there is a little bit of cause for concern. I'm not sure if we're seeing that in the other stock indexes, but this has been going down for a while here, and it wouldn't be unusual to get a bit of a price retracement. If we do enter into a momentum type situation, that can get exaggerated, but I am looking at whatever would be the equivalent levels close to these levels of the 12,062 level on the Dow Futures as really a key inflection point or a key decision point in and around that level and those identified. So it looks very much the same scenario as the Dow Futures. So let's take a look now at the transports and see what they're telling us. Now on the weekly chart, I can see here we have a fresh weekly Darvis squeeze short or a Darvis short. So the squeeze is still in a squeeze, and what that tells me is this break of price support, while it's still in a squeeze, tells me that we still have potential movement for a lot more downside. So when I look at this and I see, okay, we broke the Darvis box and we're still in a squeeze. The firing off of this squeeze could give us, still quite a bit more movement. So that to me gives me the impression that the downside on the weekly chart of the transports is potentially still intact. We haven't broke the zero line, but you can see here we closed the week out negative on the trending bias, and we actually came down and came all the way back up, and we probed the 21 exponential moving average, but we failed that level. And you can see here the 8 and 21, the 8 period exponential moving average has crossed below the 21 period exponential moving average. That in itself is somewhat of a sell signal and could denote some potential downside movement. I'm just going to expand out the weekly chart of the Dow transports, and as you can see here, that we have a target a little bit lower down here around this level, 47.49. I think I'm not trying to I guess I am trying to anticipate here because these are swing trading videos, and I'm really I like to participate and not anticipate a move. But that said, I think it makes sense here that we could potentially tag this 47.49 level. All indications given. You've got red Hakanashis, you still have more movement in the squeeze. The trend is starting to roll to the downside. 821 crossover. So I think that we could at least tag this level here, which would denote lower prices in the stock indexes. But all of that said, we have to be careful of a short-term technical bounce in the stock index futures for the simple reason that we've come a long way and we're heading into some what seem to be fairly key support levels. So let's just round this out and take a look at the Vix Index. Now the Vix is fired. The Vix is going to move opposite of the Dow, or opposite of the stock index futures in general. And as you can see here, we had a long Darvis squeeze fire back in here with the break of this Darvis box while it was in a squeeze. We have the MACD crossing to the high side. We have the trend rolling to the high side, and we have a potential target. I'm not sure why the target is so high, as I mentioned last week, but I think realistically somewhere in this area here. But it looks like we do have some further upside pressure on the VIX, which would denote downward pressure in the stock indexes. So at this time, I'm a cautious bear. I'm expecting some more downward movement, but what is not clear is whether we're going to get a bounce and a retracement first and look to maybe potentially initiate some fresh short positions a little bit higher up, not at the lows, but maybe bounce, put in a stair step, bounce, put in a stair step, and then look to short the stock index is up here somewhere and look for continuation lower. I hope that makes sense.